Welcome back, everyone. Welcome to Talking Markets. My name is Trevor. I'm here joined with Brian. Brian, how are you doing?
Doing great, Trevor. Interesting week of crypto here in the first week of February after an amazing January. So I'm excited to talk some topics with you and see what you're seeing here.
Definitely, definitely. Yeah, first things first, I'll just go down the main headlines and then pass it off to you. So, first things first, I wanted to talk about this. The CEO of Coinbase, Brian Armstrong, has renewed fears that the feds could clamp down on staking, and that's in the US. Here are the main points that he said today. We're hearing rumors that the SEC would like to get rid of crypto staking in the US for retail customers. I hope that's not the case, as I believe it would be a terrible path for the US if that was allowed to happen. Regulation by enforcement does not work, and it also encourages companies to operate offshore, which is exactly what happened with FTX. So hopefully we can work together to publish clear rules for the industry and also come up with sensible solutions that protect consumers while preserving innovation in national security interests in the U.S. So this was big news. It was the mostly specific to retail customers, which are targeted in this whole situation by the SEC. So we're going to see how this unravels. Definitely an interesting story. Next thing, Tether reports a $700 million in profit, actually, which is quite interesting. So it seems like Tether and USDT is actually still strong. Next thing, um, GHL, the stablecoin on Aave, has been released on the GoRally testnet. So could this possibly be a big bullish indicator for Aave? We'll have to see. Next thing I also wanted to talk about is the whole AI revolution that's happening here with crypto. So we have some massive gains and rallies that's been happening here with mostly leading the way is Singularity, NET. There's been 121% increase in the past 7 days. That's followed by Fetch when we're taking a look at market cap, so Fetch AI. And then we have artificial liquid intelligence as well. So some of the main gainers here. And then even Singularity DAO, that's gone up 132%. So definitely crazy what's been happening with the whole hype around AI. Brian, you want to take over?
Absolutely, yeah. So quite a few interesting things going on here. And speaking of AI, we can start right there. Make sure you can see this okay, Trevor. So we put up this insight a few days ago and talked about FET, as you just mentioned, as well as AGIX. And these are two tokens on the AI watch list that were actually number one and number two on the trending countdown. This basically measures the highest percentage increase discussion rates of any topics in crypto, whether it's an asset or just the term money or moons, what have you. These were the top two trending, so clearly the crowd had some increased interest related to them. And of course, it was related to their prices skyrocketing. And we can see over here on our AI project watch list that we had quite a few increases. I mean, we're looking at the 1 day, but if I were to add, let's just look at the price tree map and the bar chart, and we look at the last. Heck, we could look at the past. I mean, this is just the past 7 days. You can see the graph 74%, Singularity 111, Fetch 48, Ocean 36, ALI 80, 81, Numeraire 11, so on and so forth. You can see here just how many impressive runs we've seen just in the first week of February. And this really happened with, increased volume, increased social volume, and then finally, when there was increased social volume and the crowd and mainstream started to catch on, maybe just a couple days ago, that's when you started to see things plateau. And this is pretty typical because generally prices soar when the crowd is not paying attention to a specific asset. We saw in January after a long, treacherous 2022 for the bulls, no one expected that to happen in January. So less novice traders were buying in, a lot more FUD than FOMO. And then, of course, they bought in, the third week of January as prices started to taper off when Bitcoin started hitting around 23K. and we've been ranging ever since. We had kind of a microcosm of that happen with the AI assets, where they went on this huge run related to the news stories that you just showed. And as soon as the mainstream started saying, okay, I want to get in on this huge run, that's when the huge run stopped. So that's, Santiment's analysis in a nutshell really focuses on that kind of phenomenon of prices moving in the direction of the crowd's least expectation.
I think I wonder how much of a correlation there is as well with Google's flop with Bard, because I
Hmm.
think Google stock is down like 8% now.
Yeah, I think there probably is a very tight correlation, just technology in general right now, with crypto fluctuating uh, as kind of a high leverage tech stock at the moment. That's going to be kind of on overdrive when it comes to AI related projects in crypto. So I think that makes sense, Trevor. We can also just look at the overall amount of money coming in and out from whales specifically. We typically see, a drop when there are sharks and whales holding, in this case, 10 to 10,000 Bitcoin. Just their cumulative holdings going way down like this. You can see it fell off a cliff. This, of course, was related to FTX, but it was going on all the way back to early 2022, where they were dumping, prices were dropping. However, look at how stable coins, illustrated by this red, blue, yellow, and orange line, they've been going up pretty drastically. These are all represented by addresses for the respective top four stablecoin that are holding $100,000 all the way up to $10 million. And those are the key addresses that we see that when money is going in, prices generally go up. When money is going out, especially if Bitcoin's going down with it, that's a recipe for price drops. So we look to, what happened in January, tons and tons of stablecoin buying, people loading up, having more and more buying power, and eventually we see this huge rise. Well, now it's kind of tapering off. It's not necessarily going down, with the exception of BUSD here, but you can see the DAI is still moving up, USDC is kind of ranging, and Tether is still moving up as well. So it's not the worst thing in the world, more of a mixed bag than it was in January. But we do want to make sure that the Bitcoin shark and whale line here is improving, and it was looking pretty good up until that third week of January, as I mentioned. On January 23rd, that's when some profit taking started here at the 22.6K level. So that's interesting.
Overall, do we see
Mhm.
Bitcoin's dominance increasing?
Social dominance, let me show you. On the social dominance side, we have kind of a continuation of low discussions related to BTC. We typically want to see higher than 20%, which is represented by this zero axis line. When it's above, that generally leads to healthy discourse that can actually imply that Bitcoin is organically pumping and altcoins are going to pump behind it. When it's below, it's often altcoins pumping on their own, Bitcoin deciding whether to range or fall. And if it falls, it takes altcoins with it. So right now, still not quite enough social dominance related to Bitcoin. Price dominance, I don't have an illustration up, but I can tell you that it's lagged behind as altcoins have grown significantly more than BTC since the start of the year.
Interesting, interesting. Yeah.
Also, to take a look at a few specific stories here, take a look at what we saw with Wi-Fi just yesterday. There were two simultaneous Wi-Fi transfers that were sent right here. They were the largest by far, about 4 times larger than any other transactions we saw in the past 3 months for the network. And prices fell ever since. I believe they're still dropping, or at least have stayed below the point that all of this Wi-Fi was moved. So perhaps they were sell-offs of some type. It's difficult to say, but that's kind of what you can do on sentiment, is look at what the top transactions are at any given time, and relate that to whether it's happening on the peak of a price or a drop on a price, because prices generally move the opposite direction after an enormous 3-month high in whale transactions occur. Also, on that sentiment note, Trevor, we see that right now, a lot of the top assets, when we look at BTC, Ethereum, Binance Coin, XRP Network, Cardano, Doge, Solana, just to name a few, after plenty of mixed sentiment, where some are positive, some are negative. It looks like people are mostly negative now and they're expecting a drop. And that's a good thing if you're a bull, because when the crowd expects a drop, as we mentioned earlier, it's more likely that prices rise. When they're expecting a rise, it's more likely prices will drop. So if people stay negative like this and feel like this was just a huge, bull trap and now everything's going to fall back down, well, if everyone is believing that, whales are going to scoop up and continue pushing up prices until people get the FOMO fever again and try to catch that train. So I think that's really interesting too. Last topic I want to mention, this is just an overall look at the last year of supply being moved on and off exchanges, particularly Bitcoin. We see that the amount of Bitcoin outside of exchanges hit a new all-time high this week. It's now over 18.12 million Bitcoin outside of exchanges. That translates to $416.5 billion. Meanwhile, only 1.27 million Bitcoin are on exchanges right now, and that translates to $29.2 billion. Therefore, the ratio of coins off of exchanges versus on is about 14.26 off exchange for every one Bitcoin that is on exchanges. So that gives you just some pretty amazing perspective of where we've gone just in the past year. But this trend has been going on, I believe, since around 2020 after Black Thursday started.
Yeah, and I'm sure the whole FTX situation has, increased that a
Oh, I would
lot.
agree for sure. Definitely
So,
played a factor. And you can see the FTX, you can see sort of through this blue transparency here, that's where the price drop happened. And
right.
look at how the on exchange coins just plummeted right at that moment. So no coincidence there.
Yeah. Interesting. All right. So I think that's all we have for today's episode. Is
Yeah,
that right, Brian? Yeah.
yeah, I think that's a good stopping point. Pleasure as always, Trevor, and I think we can
Yeah.
resume next week with some more great analysis here. Thanks for your time.
Definitely. Definitely. Thank you guys so much for watching. We'll see you in the next one.
Cheers.